had $1,000,000, I'd buy your love. If I had $1,000,000,
The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line.
If I had $1,000,000, if I had $1,000,000, well, I'd buy you a fur coat, but not a real fur coat, that's cruel. And if I had $1,000,000,
The webinar will begin shortly. Please remain on the line.
well, I'd buy you an exotic pet, yep, like a llama or an emu. And if I had $1,000,000, if I had $1,000,000, well, I'd buy you John Merrick's remains, ooh, all them crazy elephant bones. And if I had $1,000,000, I'd buy your If I had $1,000,000, we wouldn't have to walk to the store. If I had $1,000,000, now we'd take a limousine 'cause it costs more.
The webinar will begin shortly. Please remain on the line.
To eat Kraft dinner. Well, we would eat Kraft dinner. Of course we would. We just eat more. And buy really expensive ketchups with it. That's right. All the fanciest Dijon ketchup. If I had $1,000,000, if I had $1,000,000, well, I'd buy you a green dress, but not a real green dress, that's cruel. And if I had $1,000,000, if I had $1,000,000, well, I'd buy you some art, a Picasso or a Garfunkel. If I had
The webinar will begin shortly. Please remain on the line.
$1,000,000, well, I'd buy you a monkey. Haven't you always wanted a monkey? If I had $1,000,000, I'd buy your love. If I had $1,000,000, 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 I'd be rich.
The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, thanks for joining us this Tuesday. It's the first Trade of the Week webinar of the new year. Happy New Year's to everyone. Happy 2021. So before we get started, let me know in the questions panel if you can hear me and see this first slide. Lets us know we can be seen and heard. Just a little sound check. Thank you, Todd. Thank you, Bill, Christopher, Bill, Tracy, and friends. So before we get going, we launch a couple polls at the very top of the webinar just to know who's in the room and ask a couple questions. So do you currently have an active subscription with us, yes or no? Just click on the appropriate reply. And remind everyone, while you're voting, that you are muted. You need to use the questions panel to interact and ask questions. If you have a question for the presenters, you might want to wait until we're taking questions from the audience. That way they won't miss anything. Otherwise, if you're fine with getting a typed out reply, just go ahead and ask away. So it looks like a little over 60% already have an active subscription that are in the room. That's fantastic. We do give out a discount code later on in the webinar, so stay tuned for that. If you decide you want to sign up and activate, just grab that code. Quick follow-up, are you on regular trade ideas or premium? If you're not familiar with the difference, premium is the version that gives you access to the AIs, the AI channels, the ability to back test using the odds maker. You can open up to 20 concurrent charting windows. You can set up auto trading with participating broker and auto trade AI strategies and other goodies like the advanced RBI, GBI windows, that sort of thing. So it looks like pretty much the same proportion as the previous poll. Over 60% have premium. Those of you on standard, if you decide you want to upgrade to get those goodies, just take that same code that we give out later on and use that to do an upgrade, save you on your first installment. Quick follow-up we're asking this week. Would you like to see more during our presentations about automation and Brokerage Plus? Brokerage Plus is our portfolio management tool that can be set up to trade through interactive brokerage. We're adding some more brokerages soon. And great tool. And you can also do automation and automate your trading through it. We get a lot of questions about it, so we just want to see how much interest there is during the daily webinars. So it looks like there is a majority, about 70%, would like to see more of that content, and the other 29 don't really care. But it's good to know that information, and we'll be asking that question in our other webinars this week. So as usual, on Tuesdays, your hosts are Steve Gomez and Andy Lindloff, and they're back from vacation, ready to start giving out these webinars every week. My name's Scott. I'll help out and record the webinar. And you're going to get a recording link tomorrow to the playlist where you can find that recording. So stay tuned for that. You get an email from GoToWebinar. So I'm going to go ahead and start that recording and let these two take over. Hey, Andy and Steve, how was your Tuesday?
All right. Thank you. Good, Scott. How's it going, Andy?
Hi, Steve. Hi, Scott. Happy New Year, everybody.
That's right. Happy New Year, everybody. We're back after kind of a 3-week holiday break on the webinars. And seems like after webinars yesterday and today's noon webinars, a lot of pent-up demand for viewership. So that's great. Welcome to the live people coming in. We'll go through a few slides here. Also, welcome to E-Trade users. If you were a E-Trade strategy scanner user and you're wondering what happened to that, essentially we were the mothership of that data provider. So a welcome to those people coming over as well that had that tool but no longer have it. And we'll show you how to incorporate your workflow using the newest versions if you're part of that crew as well. But before we get started, just a reminder, the trade of the week is our opinion. Andy and myself are traders of our own accounts and also employees of Trade Ideas, but what we're not is registered advisors or brokers. So anything you see or hear is not a solicitation for sale. Just a couple of opinions from us and this software subscription company. All right, so again, a lot of new users. The data's pointing to that for many reasons. Welcome to a lot of new users. And I want to remind you that it's a very feature-rich program. Andy and I have been using it for over 17 years now, so it's like very familiar to us, but the new second day sometimes can be a bit daunting for some users, and we recognize that. You can take the program in any direction you want, whether you're a hyper scalper of low float stocks on 1-minute charts, or if you're somebody who wants to sit back and build a portfolio, or maybe a swing trader like Andy and myself. We're going to talk a little bit about that today, some trading stuff. It's a great tool to learn, but the learning curve can be there, but we're here to try and help. And some of the ways we try to help are primarily the daily room with Barry Anderson, a lot of good traders in there, beginners, newbies, and experienced as well. It doesn't really matter who you are. You can ask questions and Barry will help demonstrate it. And then we take that feed during the noon hour. Myself, I did it today, but the other guys do it. There's 5 of us and we kind of mix it up throughout the week. From noon to 1 o'clock Eastern, we jump in and share our desktop. And a lot of people have been sent there from maybe morning chats that are looking for a specific visual on how to solve a question they had. So we're there for you as well each and every day for the noon session. The afternoon sessions are a bit more content driven as opposed to give and take, which is the morning session, which again, I'll show you right here. The bottom there, trade-ideas.com/live is just a redirect, and it takes you to the YouTube channel that we use for our live stream. And literally once you've clicked into that once or twice, just go to your YouTube main dashboard and the algorithm will probably serve this up for you as well. And you can just find it every day at noon. And the chat window is there to ask questions and get feature help, demonstration, or whatever you guys want to talk about. All right, so that brings us to our new year, new content, but the same old theme applies. Human and machines combined. Neither one is good without the other. Just relying on the machine is no good. That's not going to work. You need the nuance of the human to work with the ideas the machines come up with, and then the humans take it from there and we can just nuance the information in real time as it comes to us. We're better at managing a portfolio of trades than the machines are. In our experience, what we're learning is the machines are better at finding the trades in real time, and then we basically take it from there. All right, so some ideas and some agendas and some content we're going to talk about today. A market recap from myself today, an AI recap as usual from Andy. We've got a bunch of trade of the weeks to catch up on, so that'll chew up a little time. We'll talk about each and every one of those and how they worked out. And then I've got a year-end review that Michael Noss put together from a spreadsheet of all the trade of the weeks. And so we're going to revisit that, and we're going to talk about the method. That basically is just the same method Andy and I use every single day, and we'll talk about that. At the end, we've got so many symbols in the A table, which is a scan I think you guys have heard a lot about, whether through the trade of the week or through my webinars. There's a lot of names in there. So we're going to zip through that scan and just kind of show you the workflow that I do and how I find the ones, what I'm looking for, and then what I do when I find the ones that we're looking for. Then time permitting, we'll take maybe a half a dozen or so chart requests from you guys. Just give you an unbiased opinion. If it doesn't look good, we'll tell you so. All right, Andy, let's get started here. So on my desktop, let's bring up the S&P. Grab a sip of water. So what I mentioned yesterday, it's probably best illustrated on the 15 minute here, in Jamie's webinar, was the opening bell was right here. Welcome to 2021. And put yourself in some people's shoes of writing this daily chart. Probably some pretty good profits, and maybe they didn't exactly want to take those profits, or their tax accountant told them not to take those profits in 2020, but they want to raise cash and now lock in some of those profits and defer those taxes by a year so they can put a down payment on the camper or the lake house or whatever it is they're getting talked into. So I think that's what happened on the open yesterday with a pretty good sell program, and it bounced. And then, yesterday, right about there is when I think the buyers started to say, okay, that might have been the worst of it. We're just going to take it from here. And you can see it's been kind of a steady march since then on the 15 minute. What I was pointing out yesterday was the good and the bad. The good was that it was a nice bottoming tail candle, which really kind of settled right there above the 20-day moving average, which has held in the past. The bad was that it was a pretty nasty engulfing candle. They would call that one a dark cloud cover because of the red covering the green. But this market is quite phenomenal, and we have another day's worth of data. That's what we were discussing yesterday. I did say yesterday that I still expected, some residual kind of creepy selling to come in, but a bit more buying today than I kind of expected. Nonetheless, it is what it is. We closed back above all the key moving averages there, if you want to look at it from that perspective, in the S&P, but it's still a long week. We'll see what happens. I mean, I'm not going to be surprised if we just get some more wishy-washy consolidation possibly tomorrow. Who knows? I'm not a predictor. I can just tell where we've come from. Now, the NASDAQ, same story, if not even more. Nice long candle there yesterday, a pretty good stick save above the 20, and a nice convincing green candle. Remember, the NASDAQ is really the one that led us higher. NASDAQ is seriously the benefactor of the new COVID economy with online commerce and things being digital. So NASDAQ is our leader. Until then, what I do want to do is there's not too much to talk about really about the market, but what I think is interesting, and I mentioned briefly in the trade of the week, was that one thing we can count on every year on January 2nd, 3rd, whatever the first trading day of the year is, we never really know what is going to come out of the chutes in terms of sector redistribute or rebalancing. There's a lot of big fund money managers out there that run a lot of big money, and they've been sharpening their pencils in November and December saying, all right, well, when January gets here, this is where we think we're going to try and get our edge. We think this is going to get separation from the rest of the market. So they're going to go heavy into a new sector. And a lot of times these are just, they don't really blend with the 2020 year, the prior year into this year. You get crazy neck snapping type of sectors. So I figured, Andy, we might as well maybe just do a quick sector glance in this section here and see kind of what might be popping out. Oh, look at that. Oh, oil service sector seems to be showing itself in the horse race of 2021, interestingly enough. We'll go through these quickly. There's the oil commodity itself, and then energy. I'll just stop at anything that catches my eye. Okay, steel, big, another secondary move today in X and Cliff Steel. For some reason, steel seems to be starting out the year with a big push. Financials, all right, retail, semiconductors, agriculture. Here comes, the airlines have been under pressure. The airlines have not been exactly happy, so they aren't looking that great. Russell 2000, we talked about the small caps. They always typically have a great fourth quarter. If the markets are strong, we'll see if they can materialize that into the first quarter of the new year. Very tight range there in the banks. Solars are going to probably solars look ready. Okay, so, I might just go ahead and do this. I'm going to put a price alert target. We'll make that our first alert of the day. This is the ETF for solars, and if they want to continue moving higher out of this area, they probably will. I'll just leave that there close enough. So energy, oil, solars, interestingly enough. And then we get to silver. Silver and gold had a really interesting move here. I'm just going to kind of draw an eyeball. They've really kind of separated themselves, and it's even more so yesterday. If you're paying attention, the gold miners, which we'll get to them in a second, they really seem to have had a nice breakout from a downtrend. Software, software is consolidating. Maybe it'll dig in. There's our NASDAQ. That's going to look the same as the NASDAQ. There's our S&P. There's our brokers. I'm going through this quickly, I know, but I'm just trying to get some thumbnail ideas of where the interest is. Home builders have been range bound. If you're looking for low risk reward, maybe the home builders right here. As a general, that's a pretty good looking, what do they call it? Channelingstocks.com, Andy. There you go. Low risk reward probably in the home builders. Financial. Then we're going to get to the gold. Look at this. So I think something really kind of happened over the new year. We know we had a pretty good Bitcoin rally over the weekends, but this really caught my attention yesterday. That's the gold ETF as the commodity. But let's look at the biotech. A pullback in biotech, possibly another risk reward. But the gold miners, especially the juners, really separated themselves with a big, we're going to call that a breakaway gap in the gold miners. So just to kind of summarize here, as I went through the sectors for the new year, 2021, oil sector, oil, energy, solars looked interesting. Home builders look like a possible, good risk reward buy down here on the pullback. But keep an eye on the miners, you guys. Seems like that was a really significant technical chart breakout of the miners there. So unless you want to add anything to it, Andy, that's the backdrop for this week's market review.
Oh yeah, no, I'm fine. There's not a whole lot to add. It's kind of wait and see. I think on the spiders, see what happens in the next couple of days here. But yeah, kind of in no man's land right now.
Yep. All right. Whatever you want to talk about.
Okay, I'll grab it here a little bit, and I'll probably go over some of the basics of Holly, just because we got a big crowd in here, and I know a lot of people are possibly in here for the first time. So let's just pull my screen up. Hopefully you can see it.
Yep.
Get a drink of coffee here to clear the throat. All right, so guys, what you're seeing on my screen is the Holly AI. This right here is what we call the AI strategies window. And this one right here is what we call the strategy trades window. Okay, this will have nothing but the strategies in it, the winning percentage and profit factor. You may be asking, what are the winning percentage and profit factor? What happens is we have probably, let's just say, for the lack of convenience, 50 strategies that we submit to Holly. These are base strategies that we work on, and we submit them to Holly. She takes these strategies each night, and she runs them through all of our different filter sets and different combinations and market conditions, and she optimizes these over and over millions of times. And then what happens, she comes out with the best winning percentage and profit factor the next day that are in play. These have to meet a certain winning percentage and profit factor. Pay no attention to these. These are kind of different animals. There's what we call our NEO segment. And what that looks for is stocks that are in play, that are doing high relative volume, Usually news stocks either had earnings or some other news associated with it because they're doing high volume. So these are a little bit different. All the other ones are going to have to, maintain a certain winning percentage. I say maintain, have to have coming into the morning a certain winning percentage and a certain profit factor to make the cut. And then as the day goes on, Holly fires off signals, alerts. Okay, Holly does not trade. Holly is not making actual trades. These are alerts just like you would have in your own alert window. You see them in real time. Most of the traders trade these manually. Some people do auto trade them or let Holly get them into positions and they manage them from there. But, and then what will happen is Holly has 5 exit reasons that she can get out of a stock during the day. And you can see them right over here. Okay. And I think we got all 5 of them in today. We have target hit. And we have stop hit. Okay, that's the one you don't want to see. And we have timed exit. In other words, she's optimized on time as well as all of her filters and all that. And we have what's called a profit save. This is kind of like a trailing stop. Okay, once you reach a certain percentage of profits, the stock turns and goes against us a certain percentage. It will get us out of the trade, or Holly will exit. Reduce risk is kind of the same thing as profit save on the opposite direction. In other words, if a trade's out there alert, it's not working, it starts bleeding off, Holly will sometimes exit for a reason called reduce risk instead of letting it go all the way to the stop price. All right, so then we have what's called conservative profit. Conservative profit is Holly getting out, right, of any exit, whatever exit reason Holly gets out of. It's going to stop tabulating in this column right here, okay? And it's going to freeze, okay? And then we have what's called moderate profit. And what's going to happen, it ignores every exit reason except a stop hit. If a stop's hit, it will freeze. It won't let it go lower, okay? I'm not going to talk about aggressive. Aggressive is basically a very dangerous one. It does not adhere to the stops. In other words, it just keeps a tally from the moment the alert hits all the way to the close. Majority of the time in our back office, moderate profit really outperforms conservative profit. Okay. So today I thought was kind of strange because you rarely see this. All 3 of these finished today. Did you notice that, Steve?
I noticed it. Yeah.
In conservative profit. Okay. That means getting out for
totally goes against what I was saying on the intro.
Well, no, me too. I preach it every day. But at the same time, there's always going to be, no strategy works perfectly over and over again, and this is the same. But I think I know the reason why. If you look here at this, one of the better trades here in this ATAM, you can see the target was hit. So let me cut off my marker here and pull up ATAM. And what happened is there was the call, okay, at buy signal at 22 and went all the way to 23.30. Nice percentage gain there. You can see almost 6%, went a little bit higher, and it bled back down. So if you calculated moderate profit, that's why this thing eventually had a stop hit. So any trader in the right mind, decent trader, is not going to let a stock go up 6% and then get out for a loser. That's just not good trading. So that's kind of what happened today in this segment for sure. Is you had a target hit with a closed profit almost 400, and then you had a moderate profit. So that really killed, whatever segment this pullback long was in. It's in one of these here. But other than that, I don't want to break down too many of them. There were some good ones, and there was some not so good ones in here. I do want to point out this one. This wrap was a nice, beautiful call, I thought. Okay, from a signal called Little Big Guy, and this thing has bled off from $6 all the way down to $4.50. And then what you have here, you had a bar reversal. A lot of times this can be explosive after several days of selling off, and that's exactly what happened. There was a buy signal, perfect little buy signal, actually before it took out that high. So you were kind of tipped off beforehand, and then a nice, 7% run. So beautiful little trade there. Then she had some ones that, not so good. This ABC was short, and you can see it, there was a signal, and it just looked like it was breaking down the daily and just bounced right back, kind of like the market did. So not a good one there. But all in all, not bad. Not bad at all. Conservative profit today, according to my screen, based upon different share size. I'm not going to go into that today. Okay. What you see over here in Holly on this part is just based upon buying 100 shares of every alert. Okay. So if you bought, 100 shares, this is going to be your profit for today. Mine's a little bit different. Well, let me just go ahead and show you. I got time, Steve, right?
Sure.
Okay. So we have because it's good to know. If you go into tools, okay, and go into options, and then go into AI trade size, you're able to configure what trade size you want to use. And you can choose dollars per trade, you can choose shares per trade, and that's what Holly does, 100 shares per trade. Or what we like to do is use risk based on stop loss. So you put the maximum amount of risk you want. Okay, in my case, it's $200. So what happens is Holly will go out and buy the number of shares. So if the stock does go to the stop loss, that's going to be the maximum amount I lose is $200. So you can see right here, this is why I have different share sizes, because it's based upon the amount of loss I'm willing to take if it goes to the stop price. So I think this is a good way to play it versus just going out and buying 100 shares. But that can be subjective, sure. But other than that, yeah, I just kind of wanted to give you guys a breakdown. Holly, I like to use Holly as a really good alert. Okay, Steve and I have been discretionary traders for 23 years in equities, and that's just what we like to do. So we don't like to tie us into some algorithm like a lot of people want to trade and just auto trade. No, we'd rather just have our fingers on the keyboard and watching the market and trading it discretionarily. But I will say this: the people who do trade Holly the best, they do trade it manually and discretionary. In other words, they take the ones they like and they pass on the ones they don't like. So just a word to the wise there. But I have nothing against it. When it comes to strategies, anything that makes you money is a good strategy. So if you don't want to give a shot at auto trading Holly, please paper trade it for a while first, get a feel for it. All right, that's it, Steve. I'll shoot it back to you.
Good segue, because Andy's correct. He and I have been trading side by side for 23 years, and we've both evolved into the same discretionary style of trading that we call swing scalping. And it has to do with the jump rope, which is a perfect intro. So we're going to look at the A table after this in a little bit. We're going to go through them one by one, and we're going to see that the jump rope is not always setting up. But what I want to first do is go back. It's been 4 weeks, really. This is the fourth week since we've been able to talk about a trade of the week. And I've moved the cursor in the time. We've gone in the time machine back here to RVLV, Revolver, Beatles Revolver, which was really the album that started their best genre. This jump rope was setting up. Let me just tell you, if RVLV, which was the trade of the week almost a month ago, looked like this going into the weekend, it would have been a big pass, which you're going to see as we go through these trades in a moment. But RVLV gave us the jump rope that was just perfectly salivating right here. Notice, well, you can't see, but the scan at the time showed a big short float of more than 25%. I can tell you it was something I think 35 or 39% at the time. Beautiful push up, and then 1, 2, 3 days of pullback, a nice little bottoming tail right off that perfect moving average. I will take this trade every day of the week, especially when you tell me it had that many shorts in it. And then, of course, it just didn't really disappoint. And so there it is into today. It still has yet to breach. And when I mean breach, I mean close. This is why I always tell you guys, when you're swing trading, one of the things that I've learned is that when I exit a trade midday, it's usually the low. If I can just hang out and see if this thing can put up a fight, and it usually will by midday, put up a fight and find its way back home and closing candle above that moving average, no harm, no foul. It does test you here, but it's a great example. So RVLV was a really nice one. Couldn't be happier with the way that one worked out, and still hasn't looked back. Ideally, maybe if you trade as a swing trader, you take a half or 2/3 off and try. It's very hard, but let that last 1/3 just try and work for you. Sometimes that last 1/3 chunk can be the one that just really helps the performance in the account just go, because you're emotionally detached from it, which is a big, big thing. When you can emotionally detach from your trades and almost look at them like paper trading or sim trading. Once you've taken 2/3 profits off the table, it is a lot easier to do that for certain. All right, so the following week, next week, we had another trade off of the A table, Smile Direct. And what Smile Direct looked like at the moment, going into the week, I believe it was... there it is right there. So this is what the jump rope looked like for me on a Friday going into the weekend, looking for a trade of the week from the A table, which again, we will go through and I will happily share as well for anybody who wants it at the end. But the jump rope was setting up a very nice wedge that was kind of built, a little bit sloppy in terms of the moving averages, but my eye just saw that little green candle was actually trying to get a little head start and move. And so going into the weekend, that was the trade of the week. Gave us a nice 1 day, second day strong. Now, Andy and I often talk about sometimes these moves can have a day and a half to them. In a day and a half, you might want to take half profit off. Maybe you don't, but in this case, it might have been wise that half a day didn't give us much more. And then as we go through, it just really didn't go anywhere. I'll tell you what, I didn't see this day coming. I don't know what that was all about, but nonetheless, it gave us some alpha, it gave us some profit potential, some green to play with. Another example as to why it might not be a bad idea to take a third or a half off the table after a big push on that day and a half. That second day, you get whatever follow through you can get and then bank it. All right. And then what came after that, I think it was the one that I got all the bad emails from. Yeah, glue. So glue, let's go in the time machine for glue. Yeah, that was pretty much it. So glue also had a high short float, 15, 16%, I think at the time. Beautiful little kind of just little bird in the hand there after a nice pullback, setting and resting on top of the moving averages. That was the week. Nothing really looked much better. And then it did one of those nasty things where it triggered our trade and then just never really looked south. Let me look at the high there on this one. That was a high of $10. Oh, and a high of $9.99. It never even got to 10. That's very interesting. Glue got sticky, says Mike. Yes, thank you, Mike. But from the sidekick, Mike. Okay, so let's talk about glue a little bit here. I believe the actual low, or the stop loss, I should say, in this case, was not a rising moving average that I often talk about. It was a hard level of $9. Let's move that up to $9, shall we? As soon as I unstick. So I'll tell you what happened here in this one. This could have been a case, and it was for me anyway, that the first day literally closed below all the moving averages that I would not want to see it close below. The second day pretty much was the nail in the coffin there. There was really no reason. There we go. Really no reason if you didn't want to have to ride it all down that far. However, that was the technical stop, and we did hit it. So, they say in golf, and Andy and I both know the golf gods. If you play golf, you can probably laugh at this. The golf gods and the trading gods share the same office space, and they have the same sense of humor sometimes. But there's this good saying, after the bird comes the turd. If you have a couple good birdie holes, it's just a matter of time before you have a blow up bad hole. So, glue was our blow up hole. Didn't work. Oh, well, sorry. That's trading. UAVS, let's go to the time capsule on this one. Into the weekend, this was what I had to work with. Now, as I mentioned in the actual email, we're just going to say this up front. This week's pick is a speculative and volatile, so plan your shares as accordingly. And also remember, this trade is not live until the trigger price. Trigger price this week was $6.40. And there you can see what the look was as we went into the Monday morning. That's what the chart gave us. Very pretty looking setup. I'll take that setup any day of the week. After this initial incredible euphoric move, it blew off a lot of steam and should have picked up that moving average. And what I fully expected to see was a nice push off that moving average almost immediately on Monday, which we did not get. But what we decided to do was make the entry point 640, a double high, not Friday's high, but the high above, we'll call it Thursday, even though it was a holiday week. 2 candles above, and that really kind of saved us in this case, because as we move forward, the price isn't in there. There it is right there. It's up there around 640. We never got near it. Let's just go forward. Okay. The stock opened up, and as I look on the 5 minutes after the open, UAVS decided to use, as many of these companies will do, they used that euphoria to dilute their stock a little bit and raise some capital with some warrants. So they had an offering. That is never, ever, 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 ever good. Offering bad. You don't want to stick around and be a hoper. So thank God it didn't trigger. So this trade, UAVS this week, is technically a no trade. Now, I want to say that the way the mandate is, tomorrow, Wednesday, every week, if the trade of the week has not triggered by Wednesday, we're going to call it a no trade. Otherwise, if the stock triggers, we're going to calculate it all the way into the week, and we're going to use the closing price. So that little method right there will come in handy in a minute as I show you the track record that we have for 2020. Very bad, all right? If I was in UAVS, I would have gotten out immediately. Once that close dropped below our support, we're leaning on this 10-day moving average. Everything looked great. And then today, well, it tried, but look, it still couldn't get back above that moving average. I don't know. I'll tell you what, if it does trigger tomorrow, I don't want it. I'm not getting in it. I don't blame you if you don't get in it. Kind of hope it doesn't trigger. I think it's just going to be under some pressure. It's funny because as I was doing some prep for this, I almost, boy, do I wish Clean Energy had given us the jump rope on Friday. If Clean Energy had looked like that on Friday, I would have picked Clean Energy over UAV. And Clean Energy did exactly what I expected UAVS to have done. So that would have been a nice one, but it just, the timing, the stars didn't work out on that. But that's what we were looking for UAVS to do. UAVS gave us something different, and it has to do, obviously, with that secondary offering. So I'm not really interested in this play at all anymore. If you guys are, more power to you. But once they start doing that offering stuff, I don't usually play that stuff to begin with, so I'm certainly not interested. All right, so that covers the trades of the week. So let's bring up, I think it goes back to March. We started doing this. I don't know why we started in March, but here we go. We'll bring these up. The trade of the week, if you took $10,000 and started with the first trade of the week and held it, as I said, and sold it on Friday, pocketed the change and took that $10,000 and reinvested it. So mind you, this is not a compound. Compound return is very impressive, but just a simple $10,000 reinvestment in the trade of the week each week would have netted a pretty good return, as you can see by that graphic. So not bad. And this is the style that Andy and I, pretty much do and talk a lot about in swing scalping. The second one is very important. It's not so much having to do with what your win rate is, because I'll bring to that in a second. It just so happened the win rate was 71%. But you know what? I wouldn't be surprised, nor would I care if the win rate was 55%. It wouldn't bother me at all, because what really matters ultimately in the end is what we call the average win-loss. Okay. And the way it worked out, and this is what we want to strive for, the average winner across the board, across all trade of the weeks at the end of the day on Friday, was a 10% average winner. Whereas we were only really risking, I think it's like 2.8 or 2.9%, almost 3%, maybe a bit more. I should look at the number. But in the end, it comes out to we're risking $1 to make $2.50 was kind of the ratio I came up with. So that's just the way it's worked out. Now, these are the hard data points that you want to try and keep control over, because having a good portfolio that's working for you and not cutting them too soon is going to give you a higher average winner. The ones that aren't working, and again, when I mean they aren't working, I'm talking about what happened yesterday in UAVS. It's just not working. Somebody had a question about glue. The glue email suggested the trade of the week algo is being tweaked. What should we expect going forward? Trade of the week. I'm not exactly sure on that question. I'm sorry, Roxana. If you want to send an email to info@trade-ideas.com, I can try and be more expansive on that, but I'm not really sure about that one. What I can say is glue still might be in play. It's just bouncing off of that rising 50-day moving average, but not really interested in that. So going forward, just know that we're going to have some glues, and we're going to also have some pitons. Just so you know, Peloton was an early trade of the week back around $26 down here. So this is a great thing to leave you on. When I had mentioned earlier, if you can find a way to leave 1/3 of that position on the table and really make them shake the hell out of it to get you out of that last third position, sometimes these are the ones that can really pay for the rest. But we all know it's super, super hard to stay in these. We're all human, and we're all wired to fear that if we don't take that profit today, they're going to take it away from us tomorrow, and we're going to kick ourselves for not taking it. But when you sell 2/3 of it, or even 3/4 of it, and let that last little chunk run, it's so much easier to get emotionally detached from the trade. And when you're emotionally detached from the trade, it's really hard to get you out. All right. My question was more and mentioned the trade of the week algo. There's not so much an algo that's picking a trade of the week, Roxanne. I want to make that clear. It's human and trade ideas working together, which is a really good segue. We're going to go into that now. Actually, 4 out of the 5 last trade of the weeks were essentially derived from this scan called the A table, which is essentially looking for stocks that are strong stocks with a composite rating that we gave, but they're sorted and double-clicked here and colorized by short float. The ones that have the biggest short float are going to rise to the top. And so I just essentially kind of pick from these going into the weekend, and the word I'm looking for is compression. I want to see stocks that have a nice compression to them. So I think what we're going to we're going to go through them, and we're going to set up a few price alerts, and I'll show you the ones that I stop and get interested on versus the ones that that I might pass on. Yeah, Jim, I don't really know that much about this. That's a whole other game. The people who short these things really hardcore. Not really my specialty. Yes, the pre-market is not working as early as some people would like it to. We're working on that. Our overnight process will take care of that. About 4 a.m. Is the earliest. That's West Coast time, I think. 7 a.m. East Coast time is about the earliest we can get. We're working on getting it sooner. I understand. So what I'm going to do now is I'm going to start. I'm just going to quickly go through these. Not going to spend a lot of time, but the ones that catch my eye, I'm going to stop and I'll briefly explain why I like it. We'll set a price alert and then we'll just go from there. So this is really the process many times of how the trade of the week is derived. Not going to chase that. And again, the ones at the top here have the highest short float. That one's interesting, but I'm looking for more compression. That's a chase. That's a chase. You know, this could be a range play. I might be interested in something like that for the interest of setting something for a range play. I'm going to set that because it's got a high short float. But I know there's some others in here. This is starting to set up kind of interesting, and it's a smaller cap stock. I'm seeing kind of a wedge there. I would go ahead and put an alert above today's high candle if we can get back above that. And again, I'm looking for some nice compression. There's our friend RVLV. Still likes to show up. Okay, I kind of like this one. It's had a very nice tight range for a while now, and still 23% short the float. I think if it clears today's high, I would like to know about it. So what I'm doing is I'm right-clicking in the chart. I'm creating a price alert, which will now pop up on my screen and splash in front of me and give me an awareness of the fact that price just came through. All right, what else we got here? Ooh, look at how this one fell back and did that nice basing, but a pretty good chase today. I'm going to keep going. Not going to chase that. Not going to chase that. Viacom. That's interesting. Some of these television stations are compressing. Golf club. I'm not sure what that one is. Pharmaceutical. I'm not going to chase that. So you're going to see that you will get a lot of them on here that have had a green move already today, but we'll also see some that have compressed and haven't gone. Geez, a lot of these have really gone already. Plug has had a nice reversal. A nice pullback. I mean to say, I'm going to put a high above today's candle. That's a stock that's been in play lately. Builder. Yes, I'm going to give you access to the A table. You will all have access to the A table. Don't worry about that. There's Cliff. We saw that earlier. I'm not really seeing as many compressions as I thought I might see, to just kind of give us an example to mark up. So let me just go through the rest of these here. And then what I'll do is I'll share that out. I like that. That's interesting. This is a very nice compression here. I don't know what the hell these people do in nursery. Okay, people are buying nursery. But what I see is a really nice wedge building here on a stock that is moving higher. So I'll come in and I'll put probably above right there. That looks perfect. All right, let's see what else we got. Not going to chase that. You're seeing, I mean, I'm really throwing away 95% of these things, but I'm looking at this every single day, and I'm looking for, you know, CSIQ, that's a solar. We know that solars were strong. I think I might want to put an alert back in that one and see if that one finds its way higher. So as I'm going to get close to the end here, I'm going to go ahead and we'll send out, like I said, if you guys have some chart requests, I know I saw X, I think, in GE to start with. We'll take a look at those. If you guys want to put some chart requests in there, we'll take a look. This is the other one I was looking for. I kind of like this one, sale. And I was going to say, I see out of the corner of my eye, a lot of questions are coming through, and we're not really able to get to all of them. Yeah, go ahead.
Well, no, I know you were working with Roxanne. I think she's confused because she's mentioning algos and stuff like that. It's not really an algo, Roxana. It's
a scan.
It's your last question. Yeah, it's a scan that we use. But let's see. The question was answered when choosing using human and AI and G. Okay, well, we use everything that's pretty much available to us. In other words, the whole Trade Idea products. We have definitely found trade ideas on the AI, but we also use our customized scans and alerts as well. So basically, we use everything available, you know, to help with these. But it's not an algo in the sense like AI is, where obviously it's not happening in real time because we give it to you before the market opens up on Monday. So obviously, you know, it's an algo that we may have created and may turn into a scan, but I don't want you to think that it's an algo that's
it's not being spit out of a machine. It's a scan, and we're just curating it. We're curating scans.
Exactly.
Now, some people, you know, love the AI because they don't know what they're looking for. They don't know what they want to curate, but we do. So that's why we go that direction, and that's really is what's, you know, given us a better, I think, a good track record for that trade of the week. I just shared out. It's in the chat window on the GoToWebinar floating little toolbar there. You can expand that with the little triangle, and the alerts, the price alerts that I set. You know, there's TAN. We'll have to click into them here. So there's the solars that will alert me. That RVP, if it comes back up out of that base, will alert me. Whatever this one was, I'm having a hard time bringing that one up. I'm locking this thing is locking up a lot lately, and I'm afraid to tell Julio. It's just going to go down a rabbit hole. Okay, let's just come on. Give me a second. There we go. MDRX, nice tight range break out of that. Plug, pull back. Okay, so those are all the alerts that I basically came through. All right, so again, a lot of questions, you guys. If we didn't get to your question, I'm going to say info@trade-ideas.com. We'll be able to create a support ticket and go from there. The very first symbol I saw was X and GE. I mentioned X earlier. Strong sector, plowing out of that nice pullback. Yeah, X looks really good. If you want to buy it on pullback, buy it on weakness, intraday weakness, you know, maybe you'll get a maybe around here 18, 17.90 could be a place to be interested. But yeah, X looks really good. I'm not sure about GE. GE's not telling me too much. It needs to fight its way back through that armpit, I like to call it. Okay, so as promised, the A table. So there's the A table. The A table junior is nothing more than this scan, but I put a price limit, a price cap of 25. So if you want to put a price limit of 30, 40, 50, you know, whatever you can, it's open for you to do. But I'm popping the A table cloud link into the chat right now. So everybody has access to the A table. If you don't get it, or if you're watching this on replay, I'll drop it into our support channel. You can get it via email or come by tomorrow and we'll give it to you. All right. So what was the next? We'll do a few more charts that you guys want to look at, and then we'll bring Scott in because that's all we've really got for you today. How many days should the stock compress? Henry, a pullback, like I looked at RVLV, 3 or 4 days of pullback's perfect. 2 or 3 days is really nice. A compression could be anywhere from 3 days to 10 days. It doesn't really matter. I just kind of know when you see it. All right, so let's look. First chart to take a look at, hopefully. GRWG. We'll start with that one. A cannabis play. That's speaking of a nice consolidation. Yes. Okay. So I think we've already marked that one up. That's a nice consolidation. Thank you for pointing that out. Thoughts on ICLK? Bigger picture, it's holding a rounded base there. Got ahead of itself back here. It's pulled back. Doesn't look bad. And Zixi, ZYXI. This one looks a bit more under pressure. It's not doing anything. It's not giving us any reason to like that one. What about Autodesk, ADSK? Nice consolidation, nice compression, $300 stock. It's probably looking for a reason to move out of that range for whatever reason. CDNS from the same user. That's still kind of a bullish pattern, if you ask me. It's just consolidating, but in a very nice ascending triangle.
Hey, Steve, I'm gonna cut you off just because we have so many questions on here about your term compression and how many. What is compression and how many days are you looking for?
Sure.
So maybe go back to a chart you were looking at.
Let's go back to that chart that somebody mentioned that we already looked up. That happens to be a marijuana stock. What was it? GRWG. Okay, compression. So we all agree our trend is up. This one I would call more of a pullback. That little area there. But this one, I'm going to call compression, down, compression, spring, okay? It's getting painted into a corner. It's a spring. It's becoming compressed, and the more compressed, the tighter the range it gets. When it does resolve itself, the chance, and something aftermarket is triggering there, the likely it's going to move higher. So to me, that's what I would call good compression right there. And if you can think of any other charts you've seen, Andy, that may have had good compression.
I can see where some people can get it confused with consolidation, but this is more of a
compression, meaning the range is getting tighter and tighter and tighter. You're painting yourself into the wedge. You're getting into the pointed part of the wedge. It's compressing.
Gotcha.
All right, that's what I think of compression.
Okay.
Great.
That clears it up, I'm sure, for a lot of people.
Are all swing trades based on relative volume? No, it's just part of the deal. It's just relative volume always kind of helps when it's going. If the day is going, flag or triangle, George is correct there. Flag or triangle can be, or pennant can be another way that other people have looked at it. All right, I'll do a couple more. These would be the last two. We'll do a couple more. I'm going to do 3 more. CWH, CRISPR, and IGT. After IGT, we'll bring in Scott, because I'm losing my voice here. So 3 more chart requests. If you didn't get to it, send us an email and we'll talk about it. CWH. So that one, bigger picture. It's really talk about a big picture consolidation pennant flag. That's a 6-month flag, 7-month flag. It's looking like it might be ready to do something. For something like this, I might come here at $29.99 and create a price alert. That might be interesting if this thing can get back above 30. Not bad. CRISPR, gene splicer. Nice pullback. Seems to have found support on the 20-day. It's still in its trend. Yeah, it's nothing really bad to say about that. And okay, Chris, in the chat window is on the GoToWebinar. You're a user in the attendee. There's a chat bubble. If you click the chat triangle, it'll open up and expand that window. And there's some links in that chat window. And again, if any of you guys miss it, info@trade-ideas.com. We'll get that taken care of. Last one, then we'll bring in Scott. IGT. Big fake out yesterday. Geez, this is the opposite of compression. Look at that. It's like, and these are also, mind you, these can also be they call those megaphones, right? So yeah, if that thing resolves to the upside, pay attention. Very interesting one to end on. All right, let's bring in Scott, and thank you for all the participation, but I'll see you guys next time.
Yeah, thank you. So let's talk about a couple little quick things on the way out. There's a great ebook all about earnings season. Grab it before we change to another ebook to promote. So go to trade-ideas.com/earnings. It's got some strategies right there in the ebook that you can take the cloud link and put them right in your layouts. So go ahead and grab that, read it, learn from it. It's good stuff. We've got a podcast. We don't have a new one up yet in 2021, but we have a bunch that we released last year that you can listen to. There's some really great interviews, some insight. We should have a new one up pretty soon. So search for Trade Ideas Podcast in your favorite podcast catcher and add us as a subscription. That way you can download the previous editions and listen to the new one when it comes out. There's a code, Holly New Year. Celebrate the new year by subscribing or upgrading. Save 15% off the first month or year of your subscription or upgrade. And you can follow Steve on Twitter at Today Trader. We've also got at Trade Ideas and some other handles. Facebook.com/Trade Ideas Pro is the Facebook page to like and share everything we post with all your friends. And info@Trade Ideas is the correct email address to send your questions to. It goes into our help desk so it doesn't get lost. It gets answered as soon as possible. Thank you all. The recording will be up later on tonight or tomorrow, and we'll send you an email from GoToWebinar tomorrow with a link to the playlist so you can find that video replay. Thank you, Andy and Steve. Have a nice one.
All right. See you next time.
Thanks, everybody. I'll see you on Thursday.